How would you like to make your first million? And today we have Kat joining from United States, the founder of Le Blue Diamond Corporation. So Kat, tell us, what are the 5 steps to make your first million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Well, the 5 steps were number one, you have to identify a problem and validate the idea. And then you have to have a passion for that problem. Because if you don't have a passion for it, you're not going to go all the way through with it. So you have to love what you do. It can't be work where it's just a burden on you. It has to be something that you're passionate about, that you love. And once you identify the problem and you validate the idea, the key action is to spot a gap in the market or a problem that needs solving, validating your idea by researching and testing it with potential customers. So why is that crucial? Solving a real problem ensures your business has a demand. So whatever you do, it has to have a demand for it. And once you realize what that is, you're going to develop a business plan. Now, in
What's the step
developing
number 2? That would be the step
number
number 2.
two, that's number two. Number two is you're going to develop a business plan. Now, if you don't know how to develop a business plan, what do you need to do? You need to build the right team. The right team players is what's going to help execute that vision that you have. But you have to have the right people that have what? The same passion as you. So once you do that, you're going to draft a clear plan outlining your business, your model. You're going to target your market. You're going to value the proposition. And then you're going to do your financial projections
So
and growth
financial projection
strategies.
will be the step number 3?
No, this is still in step number two. This is
Okay. Wow.
Yes,
So
this
the
is
right
still in.
team and do the financial projection. Okay, very good.
Yes, on number two, because everything is a process. Nothing happens overnight. And so you want to be strategic in everything you do. It's crucial because a solid plan serves as your roadmap and it helps secure funding when you need it. So that's number two. Let's go to number three. Secure resources and funding. The thing to do with that is to determine what resources you need. So you're going to need some capital, you're going to need some equipment, you're going to need some technology. You need to explore funding options. It is critical. Anything like loans or investors or bootstrapping, it's so many different things, that you can do. Why is it crucial? Because adequate resources ensure smooth operations and scalability. That's number three. Okay. Number four, build the right team. I talked about that a little bit. Building the right team. The key action to that is assemble a team whose skills complement your strengths. What did I say? They have to have the same passion as you. It needs to complement your strengths. This is your baby. So look for individuals who share your vision and bring diverse expertise. You need someone that can bring expertise in different areas. Why is that crucial? Because a strong, cohesive team drives innovation and efficiency. Now let's go to number 5. Execute and adapt. Okay. Launch your business. It's time to launch your business. Monitor your performance and be ready to market. No, you do not give up. You're going to have some downtime. But you know what you have to do? That team that you got with like-minded individuals, that's going to be your support. And you're going to build each other up to keep on pressing forward. You'll never know the outcome unless you continue to go to the end. It is crucial Executing and flexibility help you stay competitive and responsive. The role of a passion and team, passion fuels resilience, motivates you through challenges, and inspires others to believe in your vision. And having that right team, it enhances your capacity to be innovative, to solve problems, and grow the business efficiently. So comb through those passions with a strong team, and you'll create a foundation for sustainable success.
And then number 5, the last one?
That was number 5.
Was number 5.
Executing and adapting.
Yeah. So, Kat, I want to ask you something about regarding the financial projection, because tell us what are the secrets to create an effective financial projection, because the projections, they sometimes, most of the times, what you plan that you're going to do, most of the time doesn't actually happen. Yeah. And a lot of elements goes in the way. So can you tell us what is the secret to create effective financial projections?
Well, remember when I said building the right team?
Mm-hmm.
So you want to have someone on your team that that has a background in finance,
Mm-hmm.
that has a background in building those projections. Because again, you have to do your research. And doing your research for financial projections. So what you're going to do is what I did was I had to think about everything that I needed, right?
Oh.
In the business.
Mm-hmm.
And then you have to write a list.
Mm-hmm.
And then once you write your list on everything you need from equipment, do you need a building? Do you need vehicles? It depends on the type of business that you have, what type of technology you need, and you're going to go and you're going to price all of those things.
Mm-hmm.
Once you do that, and you sit down with your team and the people that actually have a background in finance, then they're going to build a projection, a financial projection for you and what that looks like. I wish I had I could have shared a sample with you, because it's kind of hard to explain.
Oh, don't worry, briefly,
but
because at the end of the day, other people are listening in the car, so they won't be able to see. So basically,
exactly. But understanding the project's objectives, the timeline, and the scope, identifying all of the revenue streams and the costs associated with whatever that project is, like I was saying. If the project is an extension of a continuation of an existing business or an initiative, then you're going to use the historical data to help forecast the future performance. So reviewing the past income statements, balance sheets, and cash flow statements all comes into play. So you want to do a sales forecast. So you predict future sales based on the market analysis, customer demand, and pricing strategy. So after that, you're going to apply an appropriate growth rate to the forecast sales. You're going to factor in the season you're in.
The season is important.
Yeah,
very good.
It's very important. Because there are downtimes in different seasons. So, sometimes in the market it's up, sometimes it's down. And you got to understand the season that you're in and when that will be, and have a plan B. You got to outline how revenue will be generated. In other words, are you going to do it through direct sales? Are you going to do it through subscriptions? Are you going to do it through licensing fees? I had a friend who created an app. And it's called Venue GPS. And so he's doing it by subscriptions, but it was so much that he had to do to get it where it needed to be.
It's hard. The apps are hard.
It's very hard. You have to estimate the cost. You got to estimate the cost.
You need $1 million.
Right. And he had to get a lot of investors. He had to get people to buy into the vision. And so These are costs that remain constant regardless of the project output. So in other words, your rent, your salaries, you got to think about your variable costs. These change depending on the scale or the output. In other words, your raw materials, your production costs, your capital expenditures, any one-time large investments that you have to make, whether it's the infrastructure, whether it's equipment. You got to think about your operational costs. This is how you do your financial projections. Regular operational expenses, such as like your utilities, your marketing fees, your admin expenses. Then you're going to calculate your profit margin. So you're going to subtract. This is what you do. You subtract your estimated costs from revenues to calculate gross and net profit margins. You're going to determine if the project will be profitable based on those projections. So your cash flow projections are important. Hear me when I say the cash flow projections are important.
100%.
Create a cash
People
flow.
don't take a look at this. People only see turnover. And
That's
when we
right.
do the financial projection, cash flow projections, and profit, this is what the investors want really to see. Yeah? Here they call it EBITDA, right?
Yeah. EBITDA, absolutely. And it's very important to look at that EBITDA. So you're creating a cash flow forecast to ensure the project will have enough liquidity to cover its expenses as they arise. So projects that you do, you have to project both inflow, the revenue, and outflow, the expenses, the investments, the loan repayments. Identify potential cash flow gaps where additional financing might be required. So for instance, you create different scenarios. In other words, best case, worst case, and most likely to account for uncertainties that you
Wow,
may
that's a
have.
very good tip. So you create 3 scenarios for the financial projections. That's very good.
Yes.
That's a great idea, actually.
Mm-hmm. Yeah. And
I
then
see a
you
lot of financial
assess.
projection with only one case.
Right. But you have to do it with more than one case. What's your
Very
best
good.
case scenario? What's
Very
your
good.
worst case scenario?
Exactly.
What's your most likely? So y'all make sure you write those notes. Best case, worst case, most likely case.
Wow, that's a
You
great tip.
assess it, absolutely. And then you assess how sensitive the projections are to changes in those key assumptions, such as the sales volume, or the cost. And then there's the break-even analysis, where you calculate the break-even point, which is when the project's total revenues equal total costs, indicating no profit or loss. And this helps in understanding how much revenue is needed to cover fixed and variable costs.
Brilliant.
Don't forget the risk assessment. Hello.
Interesting.
So
and the KPIs, right? The risk assessment and the key performance indicator, right? Both things.
Yes.
A lot of people forget this, yeah.
Yeah. You got to identify those potential risks. We have, like you were saying earlier.
Yeah, people don't want to put it. People don't want to put it because they are scared that they don't find the funding. But the whole point is, if you don't put it, the investor is not going to give you the money, right?
They're not. They want to know everything.
People don't want to put it. So tell the entrepreneurs exactly what you're saying. Put everything. That will help you, actually, right?
That's right. Absolutely. So you identify the potential risks, the economic downturns, the supply chain issues, the regulatory changes, because it's going to always be changes that could affect the financial projections. Then you're going to factor in contingency plans or reserve funds to mitigate those risks. One of the things that
How about unexpected risks like COVID or hurricane? What we do?
Yes.
What we do with this unexpected risk?
So the unexpected risk, that's exactly why you have to factor in the contingency plans to reserve funds to mitigate those risks. You have to always put those funds aside for those risks. So for instance, with our company, when COVID is still peeping its ugly head out, and then you lose employees because they're out sick, and then you also have to continue to try to reach your production. Correct? So if you have funds put aside for those that are sick, they still, because you want your employees to come back. So we have funds aside for emergency COVID. So they don't have to use their sick time. We have emergency funds that will pay for that 5 days of their time while they're out sick. Then we have funds for if we need to hire a temporary employee to take their place until they get better. So it's very important to think about those things ahead of time and have those funds aside, those that's what you call the contingency plan,
So exactly.
Just in case you have unexpected situations to happen.
The whole point to do this financial projection, number one, is for you to have a map where the business is going, but also to keep the investor comfortable that you actually are, like we discussed, Kat, and let's be honest, yeah? The financial projection that we do, they always, nobody has done a business plan or a financial projection that after 5-10 years, they are 100% accurate. Yeah, that doesn't exist. However,
right.
The investor, what they want to see is an entrepreneur that understands risk, how to mitigate risk, contingency plans, and also be open and tell the truth and don't hide anything. Yeah.
Don't hide
you
anything.
As an entrepreneur, you don't hide anything. You put all everything on the table. You are
absolutely.
And you're
You're
doing exactly what
naked.
Scott is saying. You're doing exactly what Scott is saying. You write and talk about the risk and how you're gonna mitigate the risk, and you put that in your financial projection as long as you keep performance indicator. Now the investor have a document in front of him, right, that can give them confidence, because the investor, what they really want to see, Kat, is that they have an entrepreneur in front of them. That's what they really want to see. They want to see someone that when time goes bad and when things doesn't work, someone that can repurpose, can have flexibility, have different plans, different ideas. And the issue what we found in there, especially in the tech space, but we found in the startups in general, is that sometimes, most of the time, the investor go and tell them, the founder, look, call me in your next venture. And what they try to tell them is, look, you're brilliant, but you're not an entrepreneur yet. And I only can give you my money if I have an entrepreneur in front of me. That makes sense, Kat?
That makes perfect sense. It makes perfect sense. And you know, they're looking for someone, your projections have to be realistic and based on sound data.
That's the other thing, that people think that investors are stupid.
Right.
The founders of the entrepreneurs, they sometimes, they want to raise money, and they say, you know what, I'm gonna create this product, and I'm gonna set this idea, then I'm gonna do X, Y, and Z, and I'm gonna this, and I need all this money, and this, and that. But the investor, there is a reason why they are investors. Most of them has been entrepreneur first most of their life. Some of them have already 1, 2, 3 exits. They already, in the path that you're going in, they already coming back from that. Right. So if you want to raise finance, if you want to raise funds, be open, be transparent, tell the truth, write everything. The thing is, Kat, that people don't want to write the risk, because they say, well, if I write so much risk, this investor not going to give me their money. And it's totally the opposite. The investor, when they see that you are mentioning all this risk and have some idea how to handle the risk, the investor is saying, wow, this person is putting a lot of risk here that I was not even counting on. He has a mindset that when things change, I can actually adapt, and they have, like you were talking, Kat, about plan B. Yeah. So this is very important. Because very important. So, okay, let me ask you another question. Yeah. What do you think?
Can I say this real quick?
I just want to go for it. Go for it.
So even everything that I just said about the projections and preparing and getting them prepared, there's a last step to those projections. I talked about making sure you have people on your team that knows finance, right? Well, those people need to have experience in doing spreadsheets, because you got to present it to the investors. So you can gather all of that information, but then you got to put it in a spreadsheet, whether it's an Excel sheet or Google sheet, but it has to show financial models, scenario analysis, visualizing the data. You can use financial software. So for those of you who don't know that, you can use more advanced tools like QuickBooks, Zero, or any type of project management software. You can look that up and it'll help you to create those projection spreadsheets. So for more complex projections, such as forecasting with the macroeconomic factors or industry-specific trends, you have to consult with experts. It's very important. Do not try to do it by yourself. That's why it is important to have a team.
Yeah, Kat. So now let me ask you another question. Yeah, because this in this broadcast we support a lot social responsibility, right? Because people think that if we only do if we put the plastic in the plastic container and outside our house, outside our company, people think, well, I'm saving the planet, I'm socially responsible. But social responsibility comes not only recycling and looking after the planet. It comes when your business have a profit and then you support your charity. When you employ people with diversity, it doesn't matter if you're black, white, Chinese, women, men. So my question is the following. I interviewed the Minister of Finance of Zimbabwe, I think 8 months, don't remember. Yeah, a while. And this is what he told me. He told me, Harry, we have an amazing plan in Zimbabwe where we're giving loans to the people, and the people take these loans in the farm. Yeah, they grow some tomatoes, they grow some vegetables, they grow the business, they pay the loan back, then they ask for another loan, and then they grow the business more and more and more. And he told me, but the interesting thing, Harry, that's happening is that out of all the people that were giving me these loans, yeah, the highest percentage, huge percentage of people paying the loans back are women. Yeah, actually, women, they are more responsible, more risk averse, and they're paying back the loans. They're coming because they have children, they have responsibility. So they're looking after the money very carefully. They are investing it. They grow in this micro business. They paying back the loan. They asking for more money. Yeah. And the Minister of Zimbabwe told me that women are amazing when it comes to finance. It's very profitable because even the government, you know, they are very happy that most of the women that paying the loan backs against men. Some of them are whatever it fails and they couldn't pay the loans. So my question to you is, if this is the case and has been proven, yeah, why women are so underfunding, especially when in the tech space or everything, that when we're going to raise finance for a business, we have very, very low percent. I'm talking about, you know, huge discrepancy because funding for women and women of color against versus men. So what do you think is the problem?
Of why women are high. So I'm trying to get your question right.
The question,
why
yeah, why women, yeah, receive less funding than men. This thing that you just explained, if a woman and a man, they both go do the same financial projections, they do the risk, they do everything, and they have all these documents, amazing, yeah. Now when they go in front of the investors, yeah, 1 out of 10, the money will be given to men rather to a woman. So why do you think it's a problem? Why the investors don't want to give the money to women? Is the statistics out there in all United States, all over the world, yeah, that they give the money 90% to men, and to women is only 10%, even less. They don't trust women to give the money. So, which I already proved to you that is the other way around. But the investor doesn't want to give the money to women entrepreneurs. Why?
You said they want to give the women.
They don't want to give it. This is what the statistic shows. The statistic shows that women, they receive way less funding.
Oh yeah.
Than men when it comes to business. Yeah. So I'm asking you, why do you think this is a problem?
That is a
why
good
the investor don't trust women with the money, basically. This is what actually is happening all over the world.
Well, it is. And in all honesty, for history from years ago, it's always been a man's world, you know? But in my opinion, I think that from times past, I think just like with a lot of other things, they perceive women, I guess, as a risk. Some studies show that investors may perceive businesses ran by women are more at a risk than a man, or less promising than when men do it. Of course, it's always been biased for years. It can stem from the mistaken belief that women are less capable of handling risk or growing a successful business. Some people have higher expectations for women. And we always have had to prove ourselves to gain any type of credibility from men. That has been an ongoing thing for many years to come. You know, we had to fight for our rights in many areas. So investors have, I guess, higher expectations from women because of that. So they have to look at what kind of experience we have, what is our business acumen, have we had any previous financial success? And I guess for some reason, most men were the strong ones. In past times, they were always the leaders. But women began to stand up because truth of the matter is a lot of men consult with women. They've gotten a lot of their ideas from women.
100%. Yeah, this is what I think. You know, when if businesses comes all about mitigating risk, yeah, I think that we should open a space of equal opportunity for women because it makes financial sense. You were talking about the risk, about how to mitigate the risk, yeah. And
but you know what else I found out?
Yeah,
I found out that most women's credit scores are also lower than men for some reason.
Are they?
Yeah. I did some research at one point, and I found out that it's one of the other reasons it's hard for them to secure traditional loans is because women somehow their average scores are lower than men.
We have to check that because maybe something like you said, bias in the system, you know.
Yeah,
there could be a bias in the system, in the softwares, you know. At the end of the day, you know, the people in charge of the issue is, you know, the people in charge of finances are most of them, they are males, right? They are in charge of the capital. They take the decisions, yeah. And because they're majority male, they feel more comfortable lending the money to men to the business, and this has been the case. Now, this is the
but you know that women also have always been the caregivers, so they're more likely to take care of children if something happened versus men. Now, you know, they can be judged on that as well. They've always been the ones to earn less than men in history. It's always been unequal.
Yeah.
Their career paths has been unequal. In the context of a family, they had more responsibilities as taking care of the home.
Absolutely, you know, they multitask. They multitask. They're great multitasker. They are more how we call it. The men they take more risk, right? The women are more. This is not a generalization. This is actually John Gray, the author of the book. Men's are from Mars and women's are from Venus, right?
Yeah.
We met him. He has sold 50 million books, and he told me, and my partner Lily, Harry, men and women, they're different. But that doesn't mean that we're more or less capable than the other one.
That's
they're just different. Some of them have some strength, and the other one have another strength, right? So the men take more risk. The women mitigate and analyze more the risk. So probably, you know, the growth of the women, it could be more slowly and steady, that the men that taking a big risk and they either fail or they make a million, and probably this is what these funds are looking for. They're looking for a lot of money really fast. And then
Yeah.
they even have an equation. Okay, I lend money to 10, 8 fail, 1 break even, and then the one that wins, it will make for all the losses. This is how these funds usually work. Yeah. So
Right.
everybody's looking for the big multi-million idea. However, if we balance out the equation, and we give a chance for women in terms of funding, in terms of help them out, the investors they're gonna realize that they're leaving a lot of money on the table there,
Yeah.
because you can have someone with the skills as well that
Mm-hmm.
can take care of the finance, can mitigate the risk, and they can actually build a company. Most of my employees, when I started my first business, they were women. All of
Yeah.
them actually in my first business. Yeah, I was the
Yeah.
only boy there when I started, and this business managed to sell 5 million. And one day I arrived to the office, and the guest told me, "Harry, go home. We don't need you here."
Yeah.
And they run the business by themselves, right?
Right.
So they're very capable and very effective. So now let's talk about Kat. What do you think that is the biggest problem that startups are failing?
The biggest problem, say that again.
What is the biggest problem that startups are failing? Business are failing. What do you think is the main reason?
Oh, that businesses are failing.
Yeah. What do
I'm
you
sorry, I
think is the
didn't.
main reason?
Um, well, one of the reasons is improper planning.
Mm-hmm. Mm-hmm.
Um, a lot of times in these businesses, um, they do not do proper planning anymore. They're so busy trying to get the dollar
Mm-hmm.
that they forgot to do any type of planning, any type of strategic um, planning. And they don't understand how important that is. And also staying connected to the employees. Um, employees are who make the money for us.
Mm-hmm.
And you have to keep that of making sure that the morale is built up in the employees. But what they don't understand, everything starts at the table with the C-suite people. So poor leadership
Mm-hmm. I
is a
agree with you.
problem.
Well, yeah, 100%. Lack
Yes.
of leadership, right?
Lack of leadership.
From the founder
Strong.
to the C level to everybody else, right?
Yes. Yes. Inexperience or incompetence can lead to failure in a lot of the businesses. They don't understand that guiding a business is so important, especially in times of crisis or growth, because people tend to think that in a business everything is going to always be up, everything's going to always go great, and it's not. So poor decision making, poor planning, lack of vision, failure to inspire employees can cause a huge operational dysfunction.
Mm-hmm.
So poor management, lack of leadership is definitely a huge problem. Lack of delegation, inefficient processes.
Mm-hmm.
Having a process in place is everything. It's everything for a company. Inadequate hiring, hiring the wrong people
Mm-hmm.
will cause failure to your company.
Mm-hmm.
Um, and failure to adapt also is a problem to the market conditions, to technology. It's always growing, it's always changing. Customer needs can quickly become irrelevant, you
Mm-hmm.
know? So you have to stay on top of that.
Mm-hmm.
Uh, growth is essential for survival for any business.
Yeah, if you're
You
not
can't
growing,
stay
you're
the
dying,
same.
correct?
You don't grow, you die. You die. So it's very important. Always having the right personnel, the right infrastructure, having the cash to support. And if you don't scale fast enough, you'll miss opportunities. So, and you may struggle to remain competitive. So you have to be fast, be on your feet. And the only way to be fast and on your feet is, like I said in the beginning, pre-planning, being strategic, being ahead of the game, always doing your research, looking at the market. Ineffective marketing. If you don't have the proper marketing, you can have the best product.
Yeah.
You can have the
I
greatest product in the world.
100%.
But if you don't market that product correctly, you will be undiscovered.
100%, and that's the truth. It's ugly, but it's the truth.
Yes. You have to target the right audience. When I talked about demand in the beginning, the demand for your product, you have to target the right audience. You can have the right product and you're targeting the wrong audience and you're ineffective.
100%. Kat, so if people want to learn more about you, how they can contact you, how they can find you, and how the process works?
Yes, absolutely. So they can contact me either via email, executive@LayBlueDiamondCorp, therightchoice.com. Also, you can go to my website. It's LBD therightchoice.com. I am the right choice.
I like it. Yeah, I love it. The right choice. Okay.
Yes. Go to my website and they can fill out the contact form information and they can talk to me about anything that they want. They can get consultation. I can come and speak at workshops, do workshops. Anything that they need, I can help them from A to Z when it comes to business. You want to be a millionaire? Matter of fact, do you want to be a billionaire?
Wow, now we are talking.
Okay.
If you want to be a billionaire, they want to contact you, right?
Right.
That's the way to do it. Thank you so much, Kat. The conversation has been fantastic. I really, really appreciate it. And for you, for all of you following the broadcast on Unstoppable, see you in our next episode. How brave entrepreneurs like Kat break that wall and achieve the first million. Bye for now.
Yes. Bye-bye. Thank you.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.